All right, welcome everyone to our daily analysis call to prepare for April 20th, 2017. And just a quick disclaimer before we get going here. This is for educational purposes only. If you have questions about your individual investment needs, I recommend you talk to your investment advisor. Okay, so let's move on to the charts here. Actually, before we move on to the charts, let's take a look at our Forex Factory, what's coming up. We have, for today, April 19th, didn't have much data. We had crude oil inventories for the U.S. session, which came out in line with expectations, almost in line with expectations. There was a slight drawdown, but nothing major there. Other than that, we had CPI numbers, which is inflation data for a New Zealand dollar, which came out slightly higher than expected. And then the trade balance for Japan here is slightly, actually it is negative here. So that's what we are seeing here for April 20th here. Nothing in, no red news in the UK session. And then going into our New York, we do have important data here, Philly Fed Manufacturing Index and unemployment claims here. So we have been getting, all this week, we have been getting, and starting last Friday, we've been getting negative data for the US. So these numbers, if they come out negative, it will push the US dollar down further. So we will have to pay attention to this. And one of the reasons the negative data has so much more impact for the US dollar right now is because of the interest rate hikes that the Fed has been talking about. The market was factoring in another interest rate hike in June, but as a result of the negative data that's coming out, the chances of that interest rate hike in June have started going down, and as a result we are seeing negative impact on the US dollar. So keep that in mind. In the US session, we also have Bank of England Governor Carney speaking. So this would be interesting now because we have had the elections announcement. So at this point, what Governor Carney says will become very important. So because now, because of the political risk coming into the market, which actually the market is seeing as positive, now this will be important to see what the central bank thinks. So we have that, and then of course we have Treasury Secretary speaking later in the afternoon. So that's the news that we have. Most of it is in the US session. Looking at our markets, let's have a quick look at our news feed here. Okay, so here we have preparations for meeting between Trump and Putin underway, and which would occur before the G20 summit. And then Brussels has started freezing Britain out of EU contracts. That is interesting. If more more news stories like that start coming out, that will be negative for British pound. So keep an eye on something like that. Other than that, we are seeing here Fed's Fisher said that gradual rate hikes will mitigate spillover risks abroad. And then that's pretty much it. We have ECB's Will Roy says negative rates clearly have their limitations. So ECB, this is another thing we'll start hearing a lot more about. The Fed has started raising interest rates, so now ECB is kind of next. They are already starting to talk about cutting down on the asset purchases, and also they've started talking about, because they've had negative interest rates, so now they need to unwind these really accommodative policy as well, monetary policy. So they have already started talking about that. As they start doing that, as they start moving away from such a accommodative policy, things will start to kind of heat up, which means the euro will gain. I'm not expecting this to happen just yet, so we do need to get through the French elections first. It would likely come after that, but they're already starting to talk about these things. So we have Wilroy saying that, as well as Pratt said that, pretty much the same thing earlier as well. He was saying that they are looking at ECB is starting to talk about tightening the policy. So this will tend to happen over the next few months. So keep that in mind, and we'll start to see the impact of that. Okay, so that's pretty much it. So again, here there's another person from ECB. They are commenting on normalization again. So already we are starting to see, just like Fed did before they actually started raising the interest rate, they talked about it, they hinted about it, they made comments about it. One of the reasons the central banks like to do that is so that they're basically giving market time to adjust and get used to not having such a relaxed policy. So that's from fundamentals perspective. So let's take a look at our pairs here. Let's see what happened. Ooh, ugly chart. All right, so we'll start off with our euro chart. Okay, so this is where we were from yesterday. So today we have had a bit of a pullback. Again, this looks more like a pullback. We haven't really had much of a recovery, and from volume perspective here, the green volume has gone down, which means the buying pressure has eased. However, we have not seen any kind of selling volume come in, and the candle here is quite small. So we will consider that a pullback. And for now, we need to, so this is where we are. See how price just tested the spin and came down. I was looking for it to come down further. It hasn't done that. So it was not able to break below the 107 or hold below the 10700 level. At this point, this looks like a bit of a pullback. Now we're looking for price to move up higher again. The first test would, of course, be 107.40. And then we are looking for next target of 108.20. So looking at our move today, this was a small move. So we have had a large move to the upside, a bit of a pullback. At this point, it looks like we could get another move higher. And this 108.20 area would be the next target. Price will have to contend with this 107.40 area here first. So the move that we are likely to see, or the move that we may see, could be one of these, and then come back and then go through it, moving up to the next level. So we may see one of these and then move up. That's one option. If for some reason either we get really positive data for the US, or somebody makes a comment, the polls come out for the French election that are not very favorable, then we could see a double top formation and price come down. At that point, price will have to contend with this 10700 area. Today, it was not able to breach that. And tomorrow that will pose an important support level as well. So that will be the thing. In terms of bias would be to the upside. I am expecting a further move to the upside, more so than to the downside. So the bias is to the upside, and the next target would be 108.20. But do keep in mind that if for whatever reason price does fail at 107.40, then we could see a further move to the downside. So keep that in mind, but bias is to the upside. Pound here, pound came down. So this is what we are seeing. See this big candle up, and then yesterday we had talked about how price may do a pullback. So that's what we are seeing here. Price is doing that pullback, and now This is where we were looking for price to come down to 127.50, hasn't quite hit that. And then from here, we could see another move to the upside. So the initial target here will be 129. So we could, so price is pulled back, see right into this pin right here, this support and resistance area. And at this point, it could come down a little bit lower into 127.50 or even into this level here, which is 127, about 40-ish level. So not that much further from there. And from here on, we're looking for another move to the upside. So 129.00 would be the next target. It hasn't, we do have Bank of England Governor Carney speaking tomorrow. That could make a difference. So from as far as today is concerned, we could see price pull into this S1 level, which is this support and resistance here, 127.50-ish level here, between 40 to 50 here, and then potentially another move to the upside. This is what we were seeing this morning. Price had made the move up, and then it just was contained in this range and then broke down, filled in this inefficiency now. This inefficiency is filled completely, and now this is where we are. This was our target, and then now we could see a move to the downside from here, or it could take off from here. But I think we could see a pullback into this S1 level, this support and resistance, the bottom of these pins. So we could see price come back here and then move to the upside. We will have some resistance at the top here. So do expect resistance at the top, this level here that price tested before, so about the 2,900 level. We could see one of these, and this will be the defining price point, where if the price does not breach this level, then we're likely to see the price come lower. But if the price hangs around here, so if you get one of these moves where price just kind of hangs around here, that means it's more likely than not that the price will break through and go to the next level. So what kind of price move we see here will kind of define where it goes. But at this point, the bias is to the upside, and we are looking for price to go and test the high again. And then based on how the price reacts at the top, if it just hangs around here, so let's say price does a lot of these big moves, just kind of hangs around above this level, finally it will likely be pushed up higher. And in that case, the next target, like we said, would be that 2,900 is the first target, and the next one will be 130.50. So going back here, 2,900 is the first one, and then this one here, see this price level here, this support and resistance, 130.50. That's kind of what we're looking at. So that is British pound. Dollar CAD here broke through the range that we had been watching. So for dollar CAD, looks very bullish. There are a couple of themes that are coming into play here. So this is how the fundamentals drive prices. A first theme that's coming into play in terms of dollar CAD is the neutral stance from Bank of Canada. They're not talking about raising rates, not looking to cut rates, then they're just neutral on the currency. Then we have oil prices that have been coming down. And the third thing is they have been talking about, so this is the oil here. See how much it dropped today? So as a result, that pushed dollar CAD up. When oil goes down, Canadian dollar goes down. As a result, dollar CAD goes up. So this was a direct reason, one of the big reasons for dollar CAD to do that. And see how when we get a bullish pin bar, we had talked about this bullish pin bar a couple days ago, so this move is still continuing. Another reason is Bank of Canada has been talking about heating real estate market in Canada. We have Vancouver, where the market was completely out of control, and they're trying to dampen that down. Now Toronto is facing similar issue where property prices are going through the roof. Part of the reason is accommodative interest rate policy as well. So because of all these, the heated market, central bank is trying to put a damper on that. As a result, which is not, so, but which means they're going to be tightening the policies, which is not good for the economy because that will restrict the economic growth. So those are some of the reasons why Canadian dollar is taking such a hit lately. Even when the US dollar is weak, Canadian dollar is even weaker. So those are some of the reasons. Now, in terms of our analysis here, we are looking for another bullish move. So the first target would be 135.40-ish area here. So look at this support and resistance right here. There's a pin right here as well as here. So 35.30 is an important support and resistance area. We haven't been at this level since March, and prior to that we were here in December. So that's important, and above that we will mark the rest here as well, which is 136. I do not expect it to get to 136, but never say never. Look what happened to British pound the other day. It went way beyond where we thought it was going to go. So at this time, we will mark our 35.40-ish area as our first profit target, and then 136.00 as the second one. So in terms of the move that we could see for this would be something like this. So we are likely to see a pullback. 134.50 will be a good level, and then a move to the upside into 135.40 area. So that is the type of move to expect. So looking at a 1 hour chart here, here we have just for the last couple of days, it just has been a straight move. So pivot point, which aligns with 134.50 level, that's a good first pullback level. And then if we take a look at next area for a pullback, this 134.00 level would be a good as well. So if we see a deeper pullback, that would be the level to look for the pullback to come to. So first will be this one. If it goes deeper, we could see one of these moves and then a move to the upside. And in terms of our fibs, this is where, so S1 here, this 134.00 lines up with 38.2 pullback. Which is a good pullback for a continuation of the trend. So we'll keep that in mind as well. So we're looking for long in dollar CAD, and the two potential levels for pullbacks will be 134.50 and 134 as a deeper pullback level. And from there, we would be looking for a move to the upside. Okay, so overall, we are bullish on this. All right, next one, Aussie here has moved up. Okay, so we had a nice drop in Australian dollar. At this point, it looks negative, it looks bearish. Let's take a look at gold. I saw gold was dropping as well. Here's our gold. Gold is sitting into this support area. So it is sort of trading right just below that support area, 112.80 area here. And at this point, if it stays here much longer, we are likely to see it come lower. So this is the next target, 1272 for gold. Overall, from our daily perspective, gold is bearish. So that it's made a lower, see the lower highs, it's been making lower highs. So this looks bearish. The first 1272 and the next target somewhere around there, so 1264, this right here. So those will be the two potential targets for gold. So gold looks bearish, which means we could see Aussie come down as well. I haven't looked at copper prices, but Based on, yeah, so we are looking for, we're bearish on Aussie here. So when gold goes down, Aussie tends to go down as well. So in terms of Aussie, we don't always get a, or in terms of anything, we don't just always get a drop right after our bearish candle. We normally see a pullback. So in this case, the potential level for a pullback would be this one right here. So 75.25 area, or maybe even higher into this level here. We'll check what that level is. So we could get one of these moves. The target will be 0.7474 area. We would have to see either a big drop in gold, or we'll have to see copper prices or something, commodities drop for this to drop further. But for now, see how 3 days the price wasn't able to break this low. So as a result, and this is when dollar had a little bit more strength to it. So at this point, I'm not really looking for a big breakdown here. However, if oil keeps dropping and we keep seeing gold drop, we could see that break. In that case, the next target would be 74.35, which is this support and resistance area, or maybe slightly lower here, 74.30, 30-ish area. So we'll keep this here. At this point, looking for a pullback into, let's say, 75.30 area, and then another drop. So those levels are, we'll just get rid of them because those are all, those have played out already. So those are the levels we'll keep. First target 74.70, second target 74.30, and we are bearish on this. So in terms of our fibs, let's drop quite quick fibs here. Okay, so here we are. This is where that inefficient move had started. See how this inefficiency, we talked about this, I think yesterday or day before we were talking about this. This is the inefficient move. So now we have almost filled it, 74.74. This is where it took off, point of release. We are almost at that point of where the move is coming back. So in this case, we could see a pullback, a shallow pullback either into 75.20 area, which coincides with pivot. So we have pivot point as well as we have 23% fib retracement, or we could see it go into 75.30 area, or just above that, which is 38.2 fib retracements. So we could see the price go do one of these and then drop. So this will be our target. So those are the two places. This is nice support and resistance area on this side, and we could look for price to pull back there. Or if we get a shallow retracement, then we may just get price either coming down to here or into pivot point. But at this point, it looks like it is pulling back, so we could see it pull back into that 38%, 38.2 retracement level. Okay, let's move on to New Zealand dollar. Wow, that was quite a move based off of CPI. We had inflation data that came out, and now we have seen the price move up. This was the move caused by that. It is quite inefficient move, 1 5-minute bar all the way up. Here we are. It has been playing around with this level for the last couple of days. We did see a nice bearish engulfing candle. However, the inflation numbers coming out positive does change this a little bit now. Normally, I would say the bearish engulfing candle, this red candle, gives it a really nice bearish tone to New Zealand dollar. However, with the data coming in, I think Aussie New Zealand dollar could be a pair to trade, because Australian dollar would be, actually, let's take a look. Oh, that's an ugly chart. Let's see. Because Aussie should go down compared to the other one. I may not have it. So generally, when we have a disparity between the prices, we will see. So New Zealand would go up, Aussie New Zealand would drop as a result because Aussie is weaker and New Zealand dollar is stronger. So, okay, so in this case, this support and resistance 70-50 area would be important. If the price stays below this, then we are looking for another move to the downside. So this will be the first thing. If the price breaks above this, then it could go into the 7100 level, which is this pin, which will be the target. At this point, because it did close as a bearish engulfing candle, and then the news changed it, so we would have to see if it does this. If it breaks above and stays above, it could do that. However, if it fails where it is currently and starts getting lower here, then we are looking for price to move back down. So in terms of targets, the first place to look for a reversal would be 70-50 and then 7100. Those would be, so we have to trade this and be open to trading this to both sides. So let's go on to, in terms of downside, we're looking for this target. So 69.9, so 70 level here. It would be the first target to the downside, and then the next target would be into here. So 69.20-ish area would be the second target, which is about there. So 69.20 is the second target to the downside. In terms of upside, if it breaks the 70-50 and holds above, we're looking for it to go into 7100. So here we are, see how it did this inefficient move. Here we are into the highs. If it holds above this R1 level, we could see it go up into R3 here, which is 7100. So we'll just have to watch and see how this trades here. But from fundamental perspective, inflation CPI numbers did come in positive, which gives it more of a positive tone than how it closed for the day. So watch out for that. If it comes down, if it could give us a double top or a triple top here and then come down. So in that case, the first target would be this level here, which is actually right into here. So 69.97. So 7070 level. And then below that, we are looking for it to come back into this beginning of the inefficiency, which is our S3 level, 69.20 level. All right, any questions? Let's take a quick look at dollar yen here. We did have a nice head and shoulders pattern here. So trade balance came in a negative for dollar yen, and it has moved up since then. Looking at pound yen is holding this level. Didn't quite come down to test this here, which is where I was expecting it to. So yen may not be as strong. So in this case, from our daily, based on the daily here, we did close as a neutral candle here. So we had a bearish, and then we have the pin that is almost as big as the body here, which gives it bullish to neutral perspective at this point. And then the numbers, trade balance number came out negative, which is not good for it here either. So at this point, this is very neutral. It does not have and it has rejected the support here 3 times now. As a result, we could see it go up. All right, anything else that anybody wants me to cover? Or are we good? Okay, nothing, so perfect. We'll call it a wrap. I will upload the recording soon. Excellent, so I will see you guys in the trade room tomorrow.